Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours that impacting global markets. Starting here in the UK, we saw the new Prime Minister Rishi Sunak appointing his new cabinet. We saw some familiar names coming back. Beverman coming back as Home Secretary. Jeremy Hunt remains as Chancellor. We also saw Michael Gove making a comeback into the government as a levelling up secretary. How did market reacted? Market reacted positively. We saw pound gaining around 2% across the board. We also saw pound touching levels of 1.15 versus the dollar, its highest level since mid-September. Gilts market, the bond market was also reacted positively. 10-year gilts were down by 10 basis points. So overall positive reaction from the markets. Though equity markets were a bit sideways and FTSE closed flat yesterday. Overall, I think it's a good positive developments both from the new Prime Minister on Monday and yesterday's cabinet appointment. Markets investors seems to be taking away the political risk premium that has been building in the UK assets overall. That has been largely taken out after the last couple of days. Good performance was not only limited to the UK assets only. We saw strong performance coming out of the US market as well, where all equity and bond prices were down and equity markets were reacted positively. What was driving the performance there? It was more earnings story there. We saw some strong earnings coming from both General Motors and GE. Though we had some slight disappointing earnings coming out of Google and Microsoft. In case of Microsoft, we saw some of the cloud revenues which came in lower than expected. That impacted the overall earnings for Microsoft. For Google, the digital ad spending took a hit. So there was some weaker numbers coming from digital ad spending, which provided a hit to Google's overall earnings. If you move on to economic data front, we had two big numbers coming out of US's economic data from the US. We saw the consumer confidence, which again fell in October to the 3 months low period. Again on the concern of growth concerns and also inflationary pressures continue to build in the US markets. We also saw US house prices. Again, they recorded a back-to-back drop in August. We saw a drop in July and now in August. This is the first time the US market housing market have seen back-to-back consecutive drop in monthly drop in house prices since 2012 actually. So why did markets react positively to overall softening economic data and lackluster earnings so far? We sense that there is a clear sign. The market are sensing that the economy is overall slowing and the consumers are reining back on their spending, which means that central banks' actions, which have been taken over the past couple of months and all since the start of the year, are having a desired impact in slowing the excess demand. It also means that down the line, inflation should also come down in coming months, so that which provides central banks some room to actually taper back their interest rate rises from here on, and potentially also stimulate by cutting rates as we move into the second half of next year. And it also seems that we are probably entering the phase in the market where bad news become a good news for the market overall. In fact, we saw, if you look at market reaction from yesterday, all rate-sensitive markets reacted positively. Nasdaq, the small cap equities, all reacted positively. 10-year US Treasury also started to come back closer to 4% level before touching 4.25% on Friday. We will see if this has a leg, but it seems that the market sentiment is slightly positive overall in the last couple of days. What's ahead for today? Much quieter day on the data front. Q3 earnings in the US will be the main in the driving seat, but we will keep you posted on how the earnings comes through. But for now, we leave it there, and thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.